What's up, guys? This is Rey-Jay back with another video. And in this one, I want to break down what's happening with the overall market and talk about the situation involving the US dollar and Japan, and also break down what's happening with the big tech earnings that are coming up in the upcoming days. Just know that I am not a financial planner, so take nothing I'm saying as financial advice whatsoever. And also, if you guys can, please check out my Mumu link that's down below or use my QR code right here to sign up. Mumu is an amazing global brokerage that consists of many exclusive offers. If you sign up with my link down below and deposit $500, you're going to receive $30 worth of Nvidia stock. Deposits $2,000 to receive $100 worth of Nvidia. Deposits $10,000 to receive $200 worth of Nvidia stock, or deposits $100,000 to receive $1,000 of free Nvidia. This is a very limited time offer, so please check out my link down below to sign up to qualify for all of these exclusive offers, or once again, use this QR code right over here. Anyways, now let's talk about what's happening with the broader markets as we're seeing a big situation unfolding. So, one thing that's kind of like going viral right now is the fact that the US dollar is dropping. And the US dollar has been losing a lot of strength due to many different factors, right? You have the situation involving Venezuela. You also have the situation involving, the Fed right now, because there is a lack of confidence that the Fed is going to be as independent. And then another factor is going to be the situation involving Japan. And I think it's very important to pay attention to this. One thing that's very important is that the Japanese yen has been weakening for quite some time. And one of the reasons is because of the global financial system, where they essentially have low interest rates, a lot of discipline at keeping them at those areas. And then at the same time, there is a little bit of weakness that's been going on, at least for their markets. It also has to do with monetary policy, global interest rates, inflation, and these other factors. We're just basically seeing the yen weaken. And as a result of this, it could be leading to a shift in interest rates, possibly. As of right now, they're looking to kind of like keep rates the same. But once again, there is some risk, at least for Japan. Now, we don't want to see Japan necessarily fall off a cliff, because you have to remember that Japan essentially owns a lot of US treasuries, at least for the US's perspective. They're one of the biggest holders of US treasuries. And if they end up falling, it's going to have a ripple effect onto Asia and also onto the US. So, what the US would want to do is they wouldn't necessarily want to see Japan fall like that. And they're willing to sacrifice the dollar, at least to a small extent, just to support Japan in this area. So, if you look at what's happening to Japan relative to the US in terms of currencies, we're seeing the overall exchange rate dropping. That kind of like tells you that the US dollars to yens is dropping, which once again is telling us that they have this inverse correlation. So, just looking at this specific exchange rate, what's going on is the US dollar is weakening, and slowly, what's going to happen is the US dollar is going to be used to prop up the Japanese yen. So the Fed, they're going to be looking to essentially print more money in a sense. They're going to be increasing liquidity. And by doing that, their main plan is to just send the money to the open markets. And then once the money is there, they're going to basically buy up Japanese yen to raise demand for it. Once again, we need to support Japan because they're very important because of how many assets they own, the treasuries, and also because of the effect of some economic turn down that would happen if Japan ended up falling. So the US is just trying to support Japan right now, stopping them from taking a big hit. And the expense of that is the effects for the dollar. Now, the US dollar, it does not necessarily have to be extremely strong forever. There's going to be times when the US dollar has moments where it falls, other moments where it ends up doing better. But as of right now, it's been at this very, very weak place because of geopolitics and a lot of other factors. And simultaneously, this is not necessarily unintentional. This is kind of like an intentional decision that's been going on so far. President Trump has mentioned in the past that he's okay with the dollar being a little bit weaker because it once again could support US trade in lots of different ways. And it could also support the US GDP because of the effects it has on exports. However, he does not want a super weak dollar. I hope that's as clear as possible. He does not want a super weak dollar. And I do agree that a super weak dollar is going to be really bad. We don't necessarily want that to happen. But some weakness is something that we're seeing right now. It's also happening because of the age of digitalization, right? We're seeing stable coins and other currencies that are kind of like rivaling the dollar. And with everything that's going on, we're going to likely continue to see the dollar weaken. And then with the dollar weakening like this, we're starting to see different commodities also bouncing. So if you look at gold, for example, or silver, I'm just going to go to their futures right now. They've been taking off like crazy as a result of this. So I just want to say what's going to happen in the future is that the US is going to help prop up the Japanese yen, and this exchange that's going on could have an effect on the markets, as we're seeing, for example, gold and silver just taking off for the last couple of weeks. And this will likely continue as time goes on. Now, for the broader markets, for now, the market does remain more bullish. We're still technically on a larger uptrend, but we're going to see what ends up happening. To the Bank of Japan. We're going to see what happens to the US moving forward, and if this will lead to more market volatility as well. Now, could there be some fear about the US dollar just losing its valuation? And is that going to cause a big meltdown? It's a possibility, but not a guarantee yet. To what extent will the meltdown be? Will it be a quick like dump and then a pump, or will it be something that's more permanent? We'll have to see about that. But for the time being, it's very important to pay attention to the current situation that we're looking at. So for now, the US dollar is weakening because of many economic factors and because we're going to see an increase in the supply of the dollar. This increase in supply is what's going to be used to help the Japanese yen. The Japanese yen is going to likely strengthen a bit as time goes on, but the US dollar is likely going to continue to weaken. And then we're going to see what the economic implications are of these decisions from the Fed. I think Jerome Powell and what he says tomorrow is going to be very important if he does address this. And we're going to hear about what the Fed has to say about these liquidity issues. Are they going to continue to print more money? Are they going to continue to ease up on policy given what's going on? Another big factor out there is that inflation is not necessarily at a low level. Inflation, it went up for quite some time. It's stabilizing to a small extent, but I wouldn't necessarily say that it's at the low levels the Fed really wants yet. And although we're being told that inflation's okay, we don't have to worry too much, that's not entirely the case because when you look at the latest inflationary data, we're kind of stuck in the high twos, like 2.7, 2.8%. Could that be one of the reasons why President Trump wanted the US to now take advantage of Venezuelan oil to increase the supply? It's also another possibility because when there's more oil in the systems, when we have more oil in circulation and higher supply of it, that could bring prices down. And there's a high correlation between energy and inflation. So, anyways, just a quick update about the situation involving Japan as we're going to be expecting the dollar to weaken. For the overall market, we're still holding up nicely, but there are some factors to really pay attention to. I will talk more about the Federal Reserve tomorrow because Jerome Powell will be giving a speech. He'll talk about how I think most likely the Fed's going to keep rates the same. But then what else will be important is what he says about the US dollar and the money supply, in my opinion, and then what kind of changes we see to monetary policy. Now, those are the main things for tomorrow. One more thing I want to talk about would be the earnings for Tesla, Microsoft, and Meta. I'm going to make this video kind of quick. So, just some quick summaries of what to watch for the big earnings coming up. I first want to say that Tesla is going to be in a critical place because the earnings will be very pivotal for their valuation and also for what investors end up doing. We're going to be expecting earnings. By the way, it's tomorrow after the market closes. Tesla has their earnings, and we're expecting them to have revenue around $24.49 billion with their EPS at 44 cents per share. They want the total revenue to be at $104 billion, at least for 2026, with $71 billion making up the automotive sales. For their automotive gross margins, there are tight margins because of the pricing pressure that's been changing. We're going to see if those can improve or not. We're going to see what happens with energy and storage deployments because one factor for Tesla that's growing is the fact that they are slowly going and depending less on automotives, and they're going to be investing more in energy storage and expanding that, and then other factors like the robotaxi. Also, look out for their operating income and cash flow. That's going to be very important for the company. There was a 16% decline in Tesla's overall sales for 2025. So the question is, Is the same thing going to happen as well? I'm sorry, for Q4 of 2025, there was a 16% decline. Excuse me, guys. For 2025 Q4, is that going to be affecting their overall earnings negatively? It's always a possibility, and there is a lot of talk about how Tesla might miss on earnings. Their overall sales were down about 8 to 9% for the year 2025. But the problem is that with that potentially happening, the issue is that if they do end up missing earnings, can Tesla stock still bounce? Because there are other things Tesla could tell us that could still help the share price, such as what they're going to do to address the cooling EV demand. For example, the US has ended the federal EV tax credits. So, what's Tesla going to do about that? Are they going to basically give us more information about how they're going to look at other incentives for customers, such as FSD subscriptions or etc.? How are they going to respond to like BYD, which is seeing a massive surge in their sales, which have surpassed Tesla's, in all honesty? Right, I'm not saying BYD is better, but it's just that their sales did surpass Tesla's. How is Tesla going to respond to that? What's going to happen with price cuts and regulatory agreements that we're waiting for? What's going to happen to AI and their growth with the robo taxis? We're going to have to wait and see how that goes for Tesla. So, all in all, I think that the next earnings for Tesla is going to be very important tomorrow. I'm not sure if they're going to do extremely well or not because we did see their sales decline. However, despite that, what's going to matter is what Elon Musk says about the product, and if we get any good updates about their energy storage business and the robo taxi, that could actually offset some of the pain that could come, just hypothetically, in case that ends up happening. So we'll be watching that very closely. Don't forget the gross margins are very important. They're currently at 14.8%, kind of tight, and they're getting a bit tighter because of some pricing changes. So we'll be watching that as well. For Microsoft, I wanted to say that the EPS is expected to be around $3.92, with revenue at 80.28 billion, representing a 15.3% year over year growth. Hopefully, Microsoft does well. They have very, very good expectations. There's lots of buy ratings coming out. And we're also looking for about a 28.6% average upside from what Wall Street's expecting based off the average price target. On top of this, we're going to be looking to see a lot of good growth and what happens with the management of their increased investments into their GPUs and CPUs. And then we want to see what else they end up doing when it comes to their AI investments. There's going to be a lot of important things to watch for. Bank of America had a good rating for them, not to mention Goldman Sachs. So good news did come out in terms of those ratings. However, just to move forward, I just want to say that with what's going on, we're also going to pay very close attention to their margins. I think that's another important factor that's oftentimes overlooked, and what they're doing with their computing power. Right now, Citi decreased their price target from $690 a share down to about 660. So they're still very bullish, but they're not as bullish as before because of those margins. On top of this, looking at Meta, Meta is known for having good earnings overall, and Bank of America expects Meta to beat on earnings. We have a Q4 revenue expectation of about $59 billion with EPS at $8.27. We're expecting them to basically beat the Q4 expectations, so hopefully Meta could do it. And then we're going to see what happens with their AI trades, their AI investments, and other factors like that. The majority of analysts have very bullish ratings at $800+ a share, and we're going to see what happens overall. We're going to listen to see what they say about their user activities, what happens with some data issues that we were hearing about, and other factors. There were some new regulations that could impact their monetization, but overall, we're going to see what happens. There's also been a lot of scrutiny from China. I'm not going to go into every detail, but those are some things to watch for, at least for Meta. But overall, Meta is known for having relatively strong earnings, and the expectations are still quite decent for them, and they do tend to do well. So we'll see how it goes for them. Besides that, keep in mind that we're going to be paying a lot of attention to what happens, at least from these different big tech earnings. They could be looking for a lot of volatility as a result. Well, there's also this deal right here involving Meta. They're basically going to be supplying about $6 billion up until 2030 to Corning to supply them with fiber optic cables for their AI data centers. So a big deal was signed which is some good news. Anyways, so for the market, let's talk about this. We want to see if SPY could break past 696. If we do, we're going to basically make new all-time highs. There is some tough resistance near 696 to 697. If we can't break that, I'm going to be eyeing this gap that's still unfilled at 693. But overall, the direction is still more bullish looking at the current setups. On the QQQ, we're also looking more bullish, making higher highs and higher lows. I want to see us take out 632 to continue to push. If not, we're looking for essentially 627 down below, so keep that in mind. On the IWM, we're dipping a little bit. We're watching 262 to see if it holds. If not, we're looking for a possible head and shoulders like pattern and possible downside to 260 or below. On ES, 7,000 is a little bit tough to hold above. There's been lots of times when ES struggled to break past this resistance, so we need to see if 7,000 holds. If not, we're looking for 69.65 next. On NQ, we have resistance around 26,000. If it doesn't hold, we're looking for essentially 25,900. Bitcoin's on a downtrend. We're going to see if you hold above 88,000. If we don't, we could be looking for a dip to like 86,000. Tesla's technically on a bit of a downtrend right now. We're showing some weakness, looking for 430 and then 425 next if that fails us. But there is the possibility of an inverse head and shoulders ahead of earnings. Earnings will be the next big factor for Tesla, so we'll see how it does. Nvidia has some tough resistance around 190. We need to break this. If we don't, we could be looking for a possible rejection back down towards 185 or below as well. For a few more tickers, we also happen to have Apple. Apple is still more bullish looking for 263 very soon. Just a few more. We have Coinbase, which was showing some weakness. It still is, unfortunately, looking for essentially 206 to 205 as our target, then 200. Amazon has an inverse head and shoulders like pattern. As long as we're above 238, we're going to be favoring more upside. Might cool off a little bit. It could even retest 240, but then balance. But overall, it should slowly uptrend for at least the mid 240s. Meta pumped very nicely. We had to hold above 675 to remain bullish. If not, we could be looking for an imbalance fill back down to 660. So there's a chance we dip a little bit before attempting to bounce. And then Google could be looking for a move back down to 333, then 332. Might dip a bit before it attempts to bounce. Finally, Microsoft needs to hold above 480. If it does, we're looking for an attempt to push to 482.5 to 485. So keep that in mind. Finally, the VIX is trying to bounce just a little bit. Could this be a sign the market's about to slow down to a small extent? It's possible, but like I said earlier, the market is just kind of like flat right now. It's not making any massive moves yet. So what matters more is going to be the big tech earnings that come out. The big tech earnings are going to be important alongside FOMC tomorrow. We'll listen to see what Jerome Powell has to say and make sure to pay very close attention to what he says about the U.S. monetary policy, the supply chains, not the supply chains, the money supply, excuse me, and other factors like that. Anyways, that's it for this one. I thank you all so much for listening. The market's holding up nicely. We're still technically bullish in terms of our overall direction, but for the short term, we're slowing down just a little bit, which is completely fine. But once again, I'm not too worried about this volatility. We're more concerned about the Fed and also what happens involving the big tech earnings. Anyways, that's it for this one. Thank you for listening, and peace out.